Bitcoin is falling hard. But if you've been watching my last 4 videos on Bitcoin since October, you would have been prepared for this downside movement because we projected it in advance and it's planning out and panning out as anticipated. So today we're going to go through a step by step how we projected it, where it is right now, and what we should anticipate next with high probability, because we only do probabilities and never certainties. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008 when I was like 24. Now I exclusively focus on crypto. I used to do a lot of currencies, but now it's all about crypto. So let's dive straight in. Oh, this is a picture of me and my wife. This was our 10-year anniversary. There you go. I was going for this. This is what I was going for. Right, we did our first video, or not first video, but I'm going to go back to October 26th. October 26th did a video on Bitcoin, and it said, Bitcoin is ready to hit the 6-figure mark. What does the psychology of buying and selling tell us? Right? So what I clearly stated in the video, and you see the picture over here, but I'm going to draw it out. I'm going to draw it out for you because it's important that you know how to read the markets and anticipate what's likely to occur in advance, so you're not chasing. You don't get caught out. By the way, I'm going to cover Elliot wave and Fibonacci. What that means is it allows us to read the psychology of the market. How is the mass psychology feeling based on the price action? And if you haven't seen this stuff before, take my free Elliot wave and Fibonacci masterclass. Is in the link below. I've broken it down so you'll just understand it in real layman's terms, so you can really understand it. But what we just said here, the main thing was we're anticipating a higher high being made over here, and then a big correction to begin. Right? That was the main lesson or the main message from the video that we did in October 26th. Now, what we're going to do today, we're going to jump back and forth into the chart. So I'm going to jump into the Bitcoin chart. Let me just get rid of this. Right, this is not today's data. I've taken the date back to October 26th. So when we look at this video here, what happened is we're anticipating a further upside movement. And what happened is, I'm gonna play it out for you. I'm gonna play it out for you because what we want to see is how powerful is this Elliot wave and Fibonacci thing? How powerful is it? Because I really want you to get this. So we made a bit of a lower low, and then it went on to make a slightly higher high like this. Bang, right? So we was anticipating that this high, and I'm going to do it like this deliberately because I realized a lot of people are not realizing how powerful this can be for your investment strategy to give you an edge on the market. So we said we're anticipating this a slightly higher high to be made. You know, we had some price projections. We kind of went into a bit more detail, and then it made this higher high. And then we're going to go to the next video. So what's the date here? We're now on November 14th in this video now. So I'm going to go to the next video. So the next video I did was on Bitcoin was November 19th. November 19th. And what we said is it looks like that's been hit. You know, that's what we're looking at now. And we should anticipate now the correction to really begin, right? We got that higher high. Now we should anticipate the correction to begin. We covered a lot more information as well. I encourage you to go back and look at it because it's really like on point. And again, just because it's on point this time doesn't mean it's going to be exact every time, because we can only do probabilities and never certainties. But you'll find that 60, 70, 80% of the time it plays out as anticipated, because the psychology when it comes to crypto, it's really, really healthy. Healthy in terms of it's readable. It's really readable. So it's kind of very identifiable in advance. So now we got November 19th, or November 19th, yeah. So we're going to take the date to November 19th. So we said, look, we made the new high. We're expecting sideways to down now, sideways to down. So 19th, I'm going to draw a line here. Let me draw a box where 19th is. 19th is around here, right? So this was the date of the video, you know, bump. So you're going, look, it's starting to go down, but now we're anticipating the correction. The reversal has happened, correction. Now, there's a few other things that we're taking into account, because it's not just pattern and it's not just price. We're looking at momentum as well. There's momentum indicators. I cover that a bit more in my courses. So when you take my Fibonacci and Elliot wave masterclass, which is free, and I break down a lot of the stuff for you, if you want to learn it a bit more deeper, I take everything down to like 5-minute bite-sized lessons in my course. video on demand. You can kind of learn it at your own pace. But we cover momentum indicators, and I cover one of my favorites, which is the stochastics RSI, which just kind of tells you how the momentum is moving. And when momentum coincides with pattern, which coincides with price, a reversal is inevitable. It's like highly, highly probable. So now we said sideways to down. So then what happened? Well, then after the next few days, we obviously had a nice movement to the downside, right? A really, really nice movement to the downside with Bitcoin. And then our next video we did a follow up. I'm doing it like this deliberately so you kind of really see the power of this. This is a weekly chart that you're seeing in the video. This was on November 22nd. The price of Bitcoin was around $57,000. And it says the 100x business plan, maximize your chances of making big money in this bull run. So I really covered the dollar index compared to Bitcoin, because they tend to do the inverse. When the dollar index is going up, we're talking about the last decade. When it's going up, Bitcoin tends to go down. And when the dollar index is going down, which has been the overall trend in the last few years, Bitcoin's overall trend is up, right? And we kind of went into a lot of detail. But when I got to the Bitcoin part, we said, look, we're anticipating a deep correction. And this is my thesis on Bitcoin. We reckon we're going to get down to maybe even 42,000. Like, it's, really, really deep correction by the end of this year, early next year. End of this year, early next year. But again, we did this video, again, more on the bearish side, momentum, pattern, price, all pointing towards the downside. And this video, again, was on the November 22nd. So there's only a few days after the last one. So let's go to November 22nd, which is roughly around here anyway, here. So we're pretty much here, right? And then I did another video, right? And this was the last one that I'm going to show you with, in regards, because we need to do an update now. We're going to do an update. This one was on November 27th. November 27th, Bitcoin emergency update. Should you be on the defensive to protect your portfolio? So what it looked like at the time, and we're going to update it now, because again, we can only do probabilities and never certainties, is it looked like this 1, 2, 3, 4, 5 of the initial move to the downside. And after a 5-wave sequence to the downside, you should normally anticipate a correction, which normally typically happens in 3 legs. Now, if it doesn't happen and it continues to the downside, we have to just reevaluate. Is it a mini correction, or is it we just have to do a recount? So that's what we're going to cover now. But the main thing is that we're looking for what direction is the main trend right now on an intermediate and an immediate level. Well, it's sideways to down. And we're expecting that for at least another, what we know, 4th of December, another 3-4 weeks. I'm going to show you why as well. And again, one of the reasons I got into Bitcoin in so much detail is whether you're buying Bitcoin or not, it does impact the rest of the markets. You know that, you feel it. Your portfolio is probably down 30%, 40%, because Bitcoin's down. It does move down and it panics the market. Fear, uncertainty, and doubt, pessimism, and that just causes selling. And that's a reminder that a lot of this game is just pure psychology. Nothing to do with utility. Nothing to do with fundamentals. Because between like last week and this week, projects have improved. The tech has improved. The number of customers has increased, but the price went down. Why? It's just simply short-term voting. And how do people place their votes? It's selling. So if selling is higher than buying, the price goes down. If buying is higher than selling, the price goes up. The bulls and the bears, and they're always battling. And that's what we're reading right now. We're reading the psychology. We're even ignoring the fundamentals right now. It's pure psychology. How are people buying and selling? So what we're going to do now is we're going to jump into Bitcoin and we're going to do an update. So let's just get up to date with what is happening right now. So at the time, with the information that we had at hand over here, it looked like to me, and you would have seen me say this, let me just draw this out. It looked like a nice clean 1, 2, 3. Well, it looked like a 4 or a 4, and then a 5. And then we should anticipate a 50% correction. That's typical. And then a continuation to the downside. However, that didn't pan out that way, right? It didn't pan out that way. So let's just get the data up to date now. So it started to move to the upside. So it looked like it was going to do, look like an A. And then look like some type of B. And then I was anticipating this before a continuation to the downside. That was my anticipation for the market. Right? That was what I was anticipating. However, what unfolded is this. This is today's data. A nice deep movement to the downside. So what does this look like? So when this happens with Elliot wave, because it's not fixed. We have to make business decisions based on the information that's available to us. We have to reevaluate, because does this look like a correction to you? This, I go, well, it doesn't to me. It's not deep enough, because typically we anticipate a correction to be at least 50%. So when we measure from here to here, what I'm looking for is at least 50% pullback, which is this line. 38 would be the absolute extreme, which we're close to, but that's not typical. We're looking for this. So now we just reevaluate based on the information that's available. So what's the information that's available? Well, we're going to now just get rid of the wave count, and we have another look. We go, okay, what does this now look like to me? To me, again, we just go with what we have. This looks like a wave 1 still. It looks like a wave 2. And initially, I was anticipating this to be a wave 3, 4, and then a 5, and then a correction. But now this just looks like the wave 3. This looks like a wave 4. And then this looks like a wave 5 to complete the initial 5-wave sequence to the downside. That's what I'm seeing with my eyes based on my experience. Doesn't mean that's what it's going to be. Not necessarily, but we can only go with probabilities. But before I draw it out, because a couple of things we want to be really, really aware of what's likely to occur next. Not guaranteed, just likely. We go to the top left-hand corner where I keep my weekly chart. The thing, again, I cover this in my courses in a bit more detail, these momentum indicators. The stochastics RSI measures the momentum, right? And what I'm going to show you here, this is important because sometimes I know it might not be as clear. This top here, we're seeing, does it marry up with this momentum indicator here, this part here? This top here, does it marry up with this? Now you can tell it's not perfect because this is a lagging indicator. It's in the past, it's past data, but it's not too far off. You'll see when it goes to the downside, the markets move down. When it goes over, the markets are moving up like this, right? So it gives us a good reference point of what we should anticipate. It's a clue. It's information. It's valuable, objective information. So now that the market, the indicator here is bearish weekly, we should anticipate that the movement of the market is going to be sideways to down for 3 to 4 weeks, because it's going to take 3 to 4 weeks for the momentum to get into what we call the oversold zone. And that just basically means below this black line, right? So we're just waiting for this. It's going to take another 1, 2, 3, 4 weeks. So that means end of December, early January, right? Sideways to down. That's just objective. It's mechanical. No real conversation to be had. It's just, that is what it is, right? So that's one of the reasons, one of the main pieces of information why we said we're anticipating sideways to down, right? Combined with pattern, 1, 2, 3, 4, 5, combined with price or some price targets. And by the way, if you haven't learned any of this, you want to be sharpening your axe, because this will help you manage your whole portfolio, because Bitcoin is like an indicator for the whole market. It is the daddy of the whole market. And when daddy goes that way, the market tends to follow. Market goes that way, the market tends to follow, but we know it's more that way or that way. So do take my free Elliot Wave and Fibonacci masterclass, because I break what I'm talking about in a bit more depth. And I'm talking about this all the time. So just having even a basic understanding of the basic rules and the guidelines of Elliot Waves and the Fibonacci price, it will just give you a massive edge, because we're going to cover that now. So now let's just draw this out. So I'm going to tell you what I'm seeing here, what it looks like a wave 1, a wave 2. More often than not, wave 3s are the most extended wave, but in crypto, it's often wave 5s, right? And this is what we're seeing towards an end of a wave 5. That's what I'm seeing, right? We're going to use this as an intermediate count. Yep. By the way, the software I'm using is TradingView. You can get this for free. There's a free version. Very, very cool piece of software. But this is what we're looking at here. 1, 2, 3, 4, 5. Make sense? Yeah, hopefully that makes sense. 1, 2, 3, 4, 5. And now, after a 5-wave sequence, we anticipate a correction. But before we go into that, what I want to cover with you is what is the likely, typical, based on human psychology of an end of a wave 5? Because this is not showing strength, right? But end of a wave 5 price target. And this applies if the market's moving up or if it's moving down. It applies to cryptocurrency. It applies to stocks. It applies to currencies. It applies to commodities like gold, like oil. These price action, even the dollar index, you'll see them pan out again and again. And when they're identifiable like this, we want to use that information. So what we're going to do is we're going to do an end of wave 5 price target. So we're going to measure wave 1 to wave 3 and project it from wave 4. I covered this in a bit more detail in the masterclass on how and what I just did there, but these are very special, important ratios of human psychology, human mass psychology. And the most common end of wave 5 target, especially in crypto, is 62% to 100% of wave 1 to 3. I'm just going to tell you what I just did there. Basically what I just did there, I measured wave 1 to 3, which is basically wave 1 to 3. We measured it, and then we projected. Let me do a copy paste. Oh, get rid of that. Let me do a copy paste. We then took this same measurement and projected it forward from this wave 4. That's what this red line is, and the green line is 62% of this blue arrow, which is what this green line is, and the full arrow is the red line. And these are psychological buying and selling points, how the market is feeling, right? Pessimism, optimism, etc., etc. So what typically tends to happen is, because when you think about it, right, when the market's been moving up during this phase, let me just do it like this. Market's been moving up during this phase. There's many individuals who felt like they missed out over here. They missed out, especially when the price got to up here. There's many individuals that felt like they missed out when it was over here and they're anticipating the price to just explode. And then when they see that the price is now, effectively at a discount again, they go, oh, I'm not missing the boat this time, right? So these are the bulls and the bears. Some people are very optimistic about Bitcoin, like, hey, it's so undervalued right now. I call that the Michael Saylor strategy. He's like got an amazing vision for Bitcoin in terms of 10 years, 15 years, 20 years, 100 years, the network effect and what he's doing. Hence, he's put $3, $4, $5 billion into Bitcoin for his company's balance sheet, which is amazing. But there's other people that are going, hey man, I've made a lot of profit. Don't want to lose any more. I'm going to sell. So this is how the psychology and the dynamics play out. Because sometimes it's not obvious to know that what's driving the price. It's just people buying and selling for different reasons. So what we're going to do, a couple of other things, keeping it focused here. And I'm doing it at this pace because I know sometimes if I do it too fast, it doesn't make perfect sense. So what we're going to do is we're going to do an external retracement of wave 4. I won't break it down too much because I cover this in the masterclass. This is the typical maximum wave 5 zone, this external retracement 1.618. It's called the golden mean, the golden Fibonacci ratio. And then there's a couple of others we do, but these are the main ones. So now what we have is this nice price target, right? But what we're going to do is we need to keep in mind that the weekly momentum, as we just saw a minute ago, is still pointing down, right? So the overall market movement should be down. But I'm going to bring up the momentum indicator on the daily chart, right? So what we're doing is we're measuring the macro picture on a weekly chart. So how's the price action and the momentum on a weekly? And then we zoom in a bit on a daily chart. Every data point is one day. It's cleaner to see when you have like candlesticks like this, where every candle, these lines, these things are called a candlestick. Every one counts as a day, as a day, as a day. But we're just using a line data because it's easier and cleaner to see. It gives us closing day data. So what we're anticipating is one more day to sideways to down when the momentum indicator on the daily chart goes to the oversold zone, meaning you can see this blue line is below this black line here, right? We want it to go down, and then you'll tend to have a reversal. And then there's going to be 3 to 5 days of sideways to up, even though it's against the weekly, right? But that's natural, normal, because after a 5-wave sequence, what you'll tend to have is a bit of a correction, right? Correction to the correction. So we're not going to get too deep into the macro picture here, but what we'll anticipate is we're in this zone down here, which we anticipated. If we look back, we look at October 26th, we're expecting sideways to down. We look at the November 19th, we're still saying, now that's reversed. It looks like it's happened and happening. It should sideways to down. And then November, I think it was the 19th, 22nd, said, okay, it's looking like it's 57,000, but it should be sideways to down further. And then we did a recent one where it hit, I think it was, what was the zone? 54,000. We're anticipating some type of correction before continuation, but it didn't go as deep on the upside. So it's like the 5-way sequence wasn't finished. And this is where we are today. So what should we anticipate, right? anticipate with high probability, never certainties, is there's a couple of things. Let me just look at this. Yeah, we'll probably end up having. Yeah, I'm just looking at this. In the next bullish reversal, where the blue line goes over the red line on the stochastics RSI, this thing at the bottom here, it will make a low, likely, and then we'll get our correction. And this normally occurs in 3 waves. A, B, C is a minimum. That's what we normally anticipate. Something like this, and A, B, C, something like this. And it's gonna be a bit of forecasting, but it's more just to give you the vision of what's likely to occur and what tends to occur time and time again with all crypto, with all markets, but crypto especially. So we're gonna make a little bit of a guess. Let's just assume, for the sake of this example, that the market ends here. Now, there is something else we can do. We can do something else. We might do it in another video, but we can actually go to a lower time frame and see, does this part here break down to a 5-wave sequence? Often it does, and if it does, we can really narrow down this movement where this is likely to be. But for today, we're just going to keep it like this. But let's just assume that the correction ends here at this price point here. Let's just say it's at $44,000. Say it goes a bit further down, around $45,000. What's likely to occur next if this happens? Well, first of all, the first indicator that tells us that this correction has started, this correction on the upside, even though we're expecting further downside movement, remember that, right? Remember that, is any movement to the upside during this movement. So this movement is considered an upside movement. That's the biggest one. We're expecting a movement bigger than this movement to the upside, and that will give us a clue that this correction has started. What's the typical numbers? And I'm going to do it like this because I want you to really get this. Because if you haven't taken my Fibonacci and Elliot Masterclass, which is in the link below, it just tells you how to read this, how this pans out time and time again. So what we're going to anticipate is we're going to measure. I'm going to show you what I'm going to do. I'm going to measure this price movement to the downside, which is this movement here. We're going to measure it like this. And then we're going to take a retracement back up 50%, 62%, and 78.6%. Right? That's literally what we're going to do. So we're going to use this tool over here. Again, I'll show you how to do this in the masterclass and in my courses. We're going to click. And we're guessing here. I'm going to click here. 2 clicks. And then the ratios that we want, like I said, is 50% is the most common minimum correction, 62%, and 78.6%. These are Fibonacci ratios. And then I'm just going to cover something a bit more advanced, but I think you're ready for it. It's called time analysis. We almost did the exact same thing from a time perspective. The absolute minimum is 38, 50%, and then typical maximum correction time is 100%. But we're just going to keep it to these two for now. So what will typically happen with Bitcoin is something like this. Something like this, right? So this tells us between the 14th and around the 17th of December, we can expect this movement, A, B, C, potentially, because it's all probabilities here, to complete in this range if this ends up being a 5-wave sequence low. Because after a 5-wave sequence, we should anticipate an A, B, C. But because the weekly momentum is still down, the overall trend we're anticipating is to be down. Yeah, hopefully that makes sense. So there you have it. So we did a whole Bitcoin update. Want to read the markets like a pro because Bitcoin is like one of the major indicators of the crypto markets. I know a lot of people buy and sell Bitcoin for different reasons, which is great. But we can also use it. I'm just thinking, is there anything else? I'm just going to finish on this. We're going to finish on this. We're going, right, this looks like this movement here. Now, we don't need to get too concerned on what this correction is because there's a couple of different outcomes that we can have. But I just want to do this here. And then what we're anticipating after this is at least another movement down like this towards the downside. Now, there's a few other things we can take into account, but I think this is going to be the main thing. Because what we said in one of the videos is a particular type of correction that might be happening right now. But we'll need to There's a few other factors we need to take into account, but right now, this will tend to be the case. There's a few things I'm just thinking in my mind if I want to share, but I don't think we need to. It's not relevant right now. So there you have it. There you have it. Bitcoin update. We did the videos. Just keep track of this. Keep track. And remember, it's only probabilities, never certainties, but it seems to be panning out as anticipated. So what do you think about Bitcoin? How's your portfolio doing? I'm guessing it's down 20%, 30%, 40%, 50%. It's natural, it's normal. Ideally, you want to get risk free with positions at a 3x, 4x, or a 5x if you're buying on the open market. If you're doing IDOs, initial DEX offerings on launch pads, especially if it's in like the Bluezilla ecosystem or now that Coinstarter on the creator platform, where you can get a 20x, 50x, 100x, and some maybe even higher depending on a few different factors. You can get risk free in terms of if you invested $500, you can get that $500 back out and back into your pocket. So the risk is minimal. So if you like today's video, like, subscribe, hit the bell notification. Take my free Elliot Wave and Fibonacci masterclass. I built it for you. It's in the link below. I've worked so hard at making it simple. But we try, right? We try because it's not a simple concept. It's not a simple idea. I spent years learning it. Many mentors flew around the world many times, just going to different places around the world, whether it's Denver, Colorado, whether it's Davos in Switzerland, just learning from some of the best on the planet. And then it just applies, and it just seems lucky for me that it applies incredibly well to crypto, and it gives us an edge on the market, and it gives you an edge on the market. All right, let's finish on today's quote. This is important because if you're down, if the markets are down and your portfolio is down, and let's just say, because I've seen it with many people, let's just say, you're in six figures right now and it's on the higher end of six figures, maybe even close to seven figures, and it's hovering between six figures and seven figures, like, $700,000 to 1.2 million, $1.5 million, or even if you're on 60,000 and it's hovering into 120,000 and is now gone back into, 80,000. That's part of the game, taking drawdowns, but you have to plan in. Imagine managing your emotions, managing the positions, the vision for every crypto that you have in your portfolio. The vision, is it a wave 2? Is it a wave 4? Is it just the project's not going to survive? And how the whole thing kind of pans out. So this is an important quote. It's one of my favorite athletes. I watched his documentary the other day. I've watched it maybe like 4, 5, 6 times. Can you guess what it is? It's called The Last Dance. Yeah, you know what I'm talking about? Yeah, Michael Jordan. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that's why I succeed. So I'm seeing my comments in my private YouTube, private Telegram, and in the YouTube comments. And it was like, man, Jakir said this. He said this. Oh man, I should have taken profits. I should have been risk free. I wish I had taken profits out of 4x or 5x or 7x or 9x or 20x, but I didn't. But you can learn from that. That's okay. But as long as you don't make the same error again in the future, you want to learn from it, because that's the way we learn as human beings. Is you put your hand in the fire not deliberately, but you get burnt. But you put your hand in the fire, you get burnt. So therefore, you have to kind of take these lessons. And Bitcoin is a macro indicator for the whole market. And if it's doing a big movement to the downside, and we saw this in April, we did the same thing in April. If you watch my April videos, April, May, when there was that big correction happening, April, May, June, we anticipated it almost exactly the same way. And we found the exact same thing happen with the market. Everything went down 20, 30, 40%. But then there was some massive buying opportunities, like top tier projects, amazing projects at 50, 60, 70, 80, 90% discount. 90% discount, right? And where it felt most unnatural to buy, the scariest time to buy, the most, pessimistic market conditions, the fear, that's the best time to buy. Not guaranteed, you know that, right? You know that by now. There's only probabilities, never certainties. But it just means when everyone is fearing, and if you believe that the bull market's not over yet, as I do, I believe, it's going to go into January, February, March, probably May, June, where we're going to see a six-figure Bitcoin. And if that thesis plays out, if that thinking plays out, many cryptos are going to do incredibly well. But when you buy is when you make your money. Because someone buys at $1 and someone else buys at 20 cents, and then the project goes to $5, well, one person's making 500%, the other person's making 2,500%, right? And sometimes the difference can be a week, like a week. One person bought a week early or a week afterwards because they bought at 20 cents and the other person bought at $1. And it makes a massive, massive difference. So just kind of bake that into your whole plan. keep calm, keep it objective. Taking losses is a part of the game. Taking drawdowns is a part of the game. Drawdowns meaning, your $10,000 position might be now worth $6,000. Hey, look, that's just natural. It's the Bulls and the Bears, and but take advantage of staking. Staking's real. Staking getting rewards. So there's companies and coins out there that are really really strong and giving good staking rewards. So you just keep loading up and let this correction happen. Other positions you might want to be selling and everything else, but you have to make those judgment calls in your business plan. So keep working hard. Markets still look healthy, though Bitcoin has taken a big dip as anticipated. But let's just see how it pans out over the next coming days and weeks, and then we can manage our portfolios, still looking for these great opportunities. Have a good day. Have a great weekend. I'll see you soon.